Good morning, good morning, good morning, everybody. It is Tuesday, May the 20th. It's just going on 5:30 a.m. over there on the East Coast. I am going to be heading over to the last night of my father-in-law's wake. Uh, Wedding, got it done this morning, all good. Had an hour, 2 hours of sleep. So we're good. We're ready to go. We're ready to get into Tuesday. And yes, I have for you up here the Trump Karen because we are back into Trump tweet land. And a couple of people are getting a little bit frustrated for it. So I just want to bring you into perspective because we really don't have too much to add to what we've been covering for the better part of a week. Futures right now are fractionally down over there. 0.18% on the Dow, 0.46% on the Q, 0.36 on the ES, and 0.35% over on the Russell 2000. So, quickly, I'll bring you over to the spreadsheets because that's where just going to get a little bit of a mention. We had a fractionally higher high, 10 points higher yesterday after having gap down greater than minus 1%, and we know what that means because the algorithm has been unchanged. You see minus 1%, you got to find the bottom, but you better get ready for plus 1%. And it was a little bit easier yesterday because we had the big gap down, and we knew that the gap would be filled only because of the timing of where we are right now. We have both the full moon window having been closed, and we have this ominous, yet very new to me, Fibonacci spiral, which has been deadly accurate throughout the course of this February 19th top. Where May 19th, yesterday, we were looking for a significant high to be placed. Time will tell whether or not this is as accurate as it has been to continue as we head into July. However, we are now up 23.44% this bounce off of the April lows, which again, having broken down below 20% for 23 minutes, 21.35% drop that we had from February 19th into the April bottom. Again, on the spreads, things are still looking good. I wish that we didn't have to close the trade yesterday, but that's why I posted in the room. Okay, put in your stop losses to get your profits, or at least for your break even. And as you see there, we closed above that 59.60, so it was pertinent to do so that you made sure that you did collect at least your $1.50, $2 credit. Coming on to the Qs, same thing, a fractionally higher high and green days, 6 in a row over here on the Dow, same thing over on the SPX, 6 green closes in a row. So the trade is clearly simple, looking for that red close trade as long as you are getting paid for it. But again, on the QQQ, we are now up 29.86% from that sell-off that we had. Over on the IWM, still closing the 200s. Closed red, a little bit of a gap to be filled over on the IWM, but again, nothing fantastic out of the IWM because it has still been the lagger of the 4 indexes. Still got 4 green weeks in a row, same like you have on the QQQ, 4 green weeks in a row, same like you have on the SPX, 4 green weeks in a row. So, like I mentioned to you on, when was this? Friday. Yeah, Friday. May 16th, watch the view into July 13th. You can go over everything that you want to in that email because nothing has been changed as I shared for you on the weekend. Nothing has been changed. Nothing whatsoever. Nothing. So I'll bring you on into what's going on here for a very quick view of perspective, okay? SPY, unchanged. Using SPY only because it's a clean chart. But again, fractionally higher high, you've still got your exhaustion gap, your runaway gap, your breakaway gap. All 3 of these will be filled. The only one that I'm paying any attention to is the one from a week ago, that being the China deal gap that we had going from Sunday into Monday. That's the only gap I'm paying any attention to right there. On the SPX, again, looking here at a 10-day view with that big gap up that we had, nothing to be changed. We broke out of that fib cluster, that 5900, 5908. It's now become support, which completely makes sense. So seeing a breakdown below that 5908, 5900 resistance cluster, which is now being support, will be your first signal, first sign that, okay, perhaps everything does look as if it was forecast to be. Again, looking at a 5-day view over here on the SPX, and I can remove the 10-day moving average just to put things into better perspective. 5 days, looking back here to Tuesday. I can't get Monday on there only because I can't. But again, trolling. Thursday, as we went into OPEX, ba-boom, ba-bam, the blow-off, and as you can see here, still looks very blow-offy. We've come down to the DeepSeek low when the DeepSeek thing came out, the 5960, the November 17th FOMC lows, and this ominous 5968, which worked out very well, which goes back to the Donald Trump elections. So, put it into perspective, yeah? Joe Biden, he had a 27.45% drop back there in 2022. May I just say that he is the first Democratic elected president to have a 20% drop in my lifetime. First one. George Bush, he's got two minus 50% drops in his 2 terms. Donald Trump has 3 minus 20% drops. He's got 2018, he's got COVID, and he has what we just recently went through here from the 5-year anniversary from COVID down into that April 7th bottom. So again, to put it into perspective, because I did go out and take some notes on this, I will actually zoom out here to get it all on, just, even though I didn't put any notations onto it, coming back here into the 2016 lows. So the Donald Trump bottom, over here in 2018, where I remember December 24 and December 26 were the 2 days that we were down below minus 20%, and it was only for a couple of minutes. A lot of people remember the Steve Mnuchin PPT that was coming out there in December of 2018. Well, we had a 25.89% bounce rally, call it, going all the way into May of 2019. December to May, 25.89%. And what we got there was a minus 7.63% drop during the month of May, essentially. Coming here off of May 1, all the way down there into the very first beginnings of June. So a 1 month long ABC, very clean to see, minus 7.63% correction. Coming over here onto COVID, I did not put it down. Here. However, you can go out and you can have a look going in here into March, because obviously this was a very aggressive bounce or sell down, 35%. We had a 20.51% bounce, and within the course of a day, going here back into March, we had a minus 7.34% drop. So again, corrections, dips, they're simply based off of charts, technical setups, and we had a little bit of a drop. Now, I did not go into the breakdown of the larger drops, the larger bounces over on the COVID bounce, because it just simply didn't matter, because all of that 2021 was amazing. We were trading all the way up into OPEX and then selling down after OPEX every single month. It was one of the greatest trading years in history from where my perspective of being able to play both sides of it. But yeah, bring you on over here as we had the bounce off of the 2022 lows, your 20% bounce going here into February of 2023, your minus 9.21% drop into March, 20.96% into July, your minus 10.92% drop into Israel invades Gaza, October 2023. 28.29% multiple month rally into May of 2024, and a 5.9% drop. 14.46 going into July I point out July multiple times because this is what we're going to be concentrating on. And then your minus 9.7% drop into August, which, if you remember, a lot of it happened because of the Moody's downgrade, which happened here in beginning of August. Or not Moody's, the Fitch downgrade, but you already had the yen apocalypse because the yen was crashing with everything happening over in Japan with the bonds. So here we are again with a minus 21.35% drop and a plus 23.44% bounce thus far. So again, whether you like it or you don't like it, a dip is coming, and that dip and how it's played will make the difference as you head into summer, because unfortunately, unlike 95% of the newsletters and coverage of the market, I am not looking for us to head down into 4,000, 3,500. I'm simply not. All I'm looking for is for us to get a dip. So again, for perspective on the QQQ, what I bring you on to here and what I've adjusted is going back to when Donald Trump won in November, the QQQ broke above 500. This is your QQQ chart above 500, looking at 500 as the bottom, and here you are. And very similar to how we rallied up into November 11th before getting a pretty decent correction back down to below 500 over into the middle part of November. Basically set up for the same exact thing as we're sitting here, plus 29.86% on the QQQ, is a dip. Where we go from that dip is completely a different story, because it all sets up on how does this dip work. Over here on the Dow Jones, again, going back into the highs from the beginning of the year, back in January, very clean ABC and a very slow-moving, slow recovery back finally above the March 26 highs, right back to that over here with the Dow Jones having done all of the work yesterday. And then I bring you to the IWM to finish you off, because again, IWM is now living above 200 like it used to be, but it was one of the weaker gaps or weaker indexes yesterday, as it still has an unfilled gap going back to the weekend, back up here at 208, 209, 208 something up here, 208, 209. But anyway, you know, again, it's the Russell 2000 being the weaker link. So, like I say, there's not really much that you can throw onto here other than the fact that, you know, yeah, it might be, you know, comical and aggravating that you kind of got to wait for Donald Trump to come out and say what he's going to say because they're telling you that he's scheduled to say something, but this doesn't really change anything. The charts are the charts, the market's the market, the algorithm and the Fibonacci's, you know, whether, you know, it's being tough out there or not, doing pretty damn good with it. And so I've got a couple of trades out there for you for the end of the week for May 23, one on the SPX, one on the QQQ. I still have my trades going out to the end of the month and into June. And again, that's the reason why my trades going out to June, you're not seeing me go out like I did before, going into the September or even December's to capture a bigger move of it all, because I'm simply looking for us to get a dip. That's it. So enjoy your day. Enjoy your Wednesday. Tomorrow, I won't be able to put out a video tomorrow, but I will have an email out before I leave town. So again, all about perspective. Don't blow yourself up, because it's a bigger, broader, wider picture than your little ping pong into the middle 0 DTE. Trust me.
Good morning, lab rats. Today we're shifting gear. Today is Greedy Bastard Day. Secret to riches, lab rats, is the same as the secret to comedy. Time.
1:15:10, Max. Feels like we should move now.
Not yet, Alf.
Boss, why'd you keep calling me Alf?
Because you're an aggressive little flunky chemical. And as your boss and genetic superior, I can call you whatever I want.
1:15:19. 1:16. 1:16:10.
Right, lab rats, just remember, we're not here for the dental plan. Sell.
all sorts skinners dumping bonds onto the market.
Well, it can't do that. There's a gentleman's agreement on the exchange.
A gentleman's agreement presupposes there's a gentleman involved.
Hay prices are crashing through the floor.
Come on, people, get off your asses!
Come on, start selling! Sell!
Going down.
Buy. Buy it all back! Immediately buy it all back! You're a genius, mate!
You bugger, he's forced down prices, he's gonna buy everything back on the cheap!
Start buying! Buy it now! Start buying!